Welcome back. You're watching Trade of the Week with me, Zinati Guma, and joining us to unpack AngloGold, Franco-Nebada Corporation and Pan-African Resources is a founder of Herenya Capital, Petri Redelinghuys. Thank you so much for your time, Petri. As much as it's all gold, I feel like they're all different, you know, in some ways. Yeah. I actually just want to start off with gold because, I mean, that's created quite a hype. It seems that gold is creating a hype every week because every week it's hitting a fresh new record high. And for me, it's a little bit of... it's not matching with what Fed Chair Jerome Powell has been saying because he was testifying in front of Congress and Senate last week, and basically he said the Fed isn't immediately ready to cut rates. And in fact, the can for interest rate cuts was moved by the markets, was kicked down to June, and that means that then we'll have less interest rate cuts than what markets had initially expected. So why has gold been keeping on, you know, hitting those fresh record highs?
I think that and this is something that I'm feeling a bit like a broken record because we've been speaking about this for what feels like forever, right?
Yeah.
The macro risk is higher than what we think it is. The US economy is in worse shape than what we think. Generally, when interest rate cuts come, it is because the economy has slowed down so much that it has to now be stimulated, right?
Yeah.
However, we still have persistent inflation problems, which is, I think, partially outside of the control of what the US sort of Fed can do. A lot of the tensions in the Middle East, for example, has put the Panama Canal, the Suez Canal, these things are kind of blocked up and can't really get a lot of traffic through there. For various reasons, one day there's an attack, the next day there's a boycott, whatever the case. With these type of supply chain issues, I mean, if you look at something like the Suez Canal, 50% of global trade goes through the Suez Canal.
Yeah.
Right?
That's big.
And every so often there's an issue there, or there's an attack off the coast of Houthi, I'm not sure how to say it. Houthi, there you go. And we saw a couple of weeks ago, that was big news, the US was going to intervene and all that kind of stuff because of the risk it places on that particular trade route, right? So why is that important? Well, if no one can trade through there, what does that do to prices?
Yeah.
That's inflationary pressure, right? Plus, we've seen oil on the rise as well, recently, which again has put on quite a bit of inflationry pressure. So
people want to run to safety. They want to run.
They're running to safety. They're starting to see that things are not necessarily as rosy as it seems. And if you think that, I mean, think about Nvidia and the massive, absolutely massive, colossal stock rally that's put in, right? On Friday, I think that put in the biggest bearish reversal candle I've seen in a long time. I mean, it was something like $273 billion worth of price reversal.
Yeah.
So it just shows you how exceptionally, I mean, I actually want to show that chart to you.
Yeah.
So I think that one of the things is it just becomes almost, okay, so that's the weekly chart. Let's have a look at the daily chart. So look at the size of that sort of bearish reversal candle, right? And it just shows you that if that movement there, which granted was big, 5%, 5.7% down, if that movement is something like $270 billion in market cap valuation change, maybe this thing is somewhat overvalued, don't you think?
Yeah.
You're telling me this one company is bigger than all of South Africa's economy?
Yeah.
No ways, right?
Yeah.
So I think that it's starting to get extremely stretched, and that is starting to come through in the price of gold.
Yeah.
What I find very interesting is how there's still been an enormous amount of focus on, for example, the tech stocks.
Yes.
That a lot of these gold stocks are trading in a space where it's like they've been forgotten. Some of the stocks we'll be looking at today, for example, are trading at levels where they haven't been, well, if you compare them to what the gold price has been, or where the gold price currently is, they seem crazy undervalued.
Do you think that maybe investors struggle to be long on gold?
I think that everybody is just super focused on the new hype, right? It's tech, it's AI, it's chip manufacturing.
Yeah.
And you've kind of forgotten. Remember, we as humans, we're pack animals. We follow the lead. We're kind of herd animals, maybe not pack animals, more herd animals is a bit more accurate. And I think that the herd has been, chanting AI tech, AI tech, AI tech for the longest time. And so far it's been, almost a foolproof formula. People are swapping almost any share they have. Oh, I've got these mining stocks that aren't doing well. Oh, I've got this diversified industrial that's not doing well. Can I sell them and buy NVIDIA at $900 a share? Are you crazy? you know? And I think that's what's happening is everybody's chasing the one winning coin, and everybody's kind of forgetting that valuations matter. The real economy is still a thing, and AI will probably change the world. I mean, absolutely change the world, but not tomorrow. Right?
Quite interesting what you're saying, that there seems to be kind of lag in the gold miners compared to what you've seen with the gold chart. Would you say that the gold chart right now is maybe looking a little bit frothy?
It is a little bit in the very short term. So if you look at this daily chart, for example, it looks like it's really running incredibly hard, right?
Yeah.
And we can also see here the stochastic, which is just a regular slow stochastic. 1433 is the parameters on it for those interested. You can see that it's sort of starting to turn around. We do also know that the stochastic can stay high in this region for some time. So just because it's sort of starting to turn doesn't necessarily indicate that it is a selling signal. But it does feel a bit like it's a little overcooked. So a bit of a correction could make sense. The macro picture, I think, still goes quite a bit further. Just for interest's sake, I'm just going to whip out a ruler here and measure this. So that is a move of around, over 7 days of around 10%, right?
Wow.
Here we have another move of around 10% in 11 days, right? If we look at this move here, where we broke out, we haven't yet gone to 10%.
Okay.
So if history repeats itself, it rhymes, it doesn't always repeat itself, it's not always completely accurate. This shorter term target is about $2,260. So I think it's more likely that we get a consolidation for a few days and maybe a final push to 226.
Yeah.
However, a bit of a pullback wouldn't necessarily be the end of the world. I think it might give a nice opportunity for us to get in.
It wouldn't mean that there's a bear trend. It would just mean that maybe investors are just trying to take some profit.
Yeah. So let's look at a weekly chart and give it sort of bigger picture context, right? Here we have essentially a large channel that the gold price is trading in, that has been trading in for some time. So it's not entirely drawn in here, but if we look at this channel over here, we're looking at a potential target of, what is this, $2,400, $2,500 an ounce.
Okay.
That's a long way up. It's not going to happen tomorrow. It's not an AI stock, right?
Yeah.
But over the next couple of weeks, every candle here being, representing an entire week, I think over the next couple of months, 6, 8, 9 months around there somewhere, we probably find ourselves closer to the top of this channel. In which case, if that's, and it's not going to be a straight line. There'll be corrections along the way. But if that is the case, if that plays out, then some of these stocks that we've picked even historically on here, for like DRD Gold, for example, I mean, this thing has an enormous amount of upside to go.
Yeah.
If you look at this, and just for comparison, now, granted, this is not comparing it to, we're not comparing apples with apples here, right?
Yeah.
Let's just index that to 0.
And that is DRD Gold.
Yeah, so this is DRD Gold.
Okay.
So if we look over the last year, you can see that this one, over the last 12 months, we'll go to a daily chart. Sorry, I'm going to delete this. This is kind of tracking the gold price quite nicely, right? Sorry, if you look over the last 12 months, these labels are a bit annoying. But the sort of price and the gold price is relatively close to each other, right? But now if you look at sort of someone like we'll be looking at a bit later, Franco-Nevada, for example, over the last 12 months, let me use FNV.
Yeah, that Franco-Nevada, actually, I've never heard of it, a Canadian miner.
If you look at that gap over the last 12 months, there's an enormous price difference here.
Okay.
Right, so that's why I think that we have a situation where we have some of these gold stocks, locally offshore, that are really looking crazy cheap. Just also, as a point of reference, the DRD price and gold price in dollars are very close to each other. If you convert that gold price to rands, it's a very different story. DRD is deeply undervalued, as is Pan-African. We'll get to that in a sec.
Okay. Well, let's actually get to Pan-African because they actually last released good results, and it seemed to be against what the other miners are reporting. For example, DRD Gold reporting higher costs, Pan-African on the other hand reporting marginally reduced costs. They benefited from the higher gold price and production. How's that looking?
So I think there's a couple of things that they're doing right. One, their tailings reprocessing facility is obviously helping bring that overall, the average cost down, the average sort of all-in sustaining cost or whatever the acronym for that is. I think it's a major benefit to them. I think that makes them one of the cheapest sort of gold mining or gold producers in the world, if I'm not mistaken. They're also one of the first ones to have really large-scale solar PV plants to even further over time, obviously, reduce their
that's also helping
their costs. So that's also helping a little bit. Look, obviously the capex on that, the upfront capital expenditure is massive, but eventually that starts to pay itself back, and we have a situation where they're turning into one of the favoured gold picks in the sector. So if you look at this, for example, we're just going to look at a weekly chart. A bit sad. I drew in so many nice things to put on the blog earlier today, and none of them are here. So we'll add that, just take that off, and we'll add that. Right, so here we have essentially just a big channel, and if we measure this channel, which we can do by means of a little arrow. Sorry. Drawing lessons with Petri. What was that? That guy who used to do the drawing on TV. Anyway, so there you go. So there's a nice little price target of R4 if you just look at the size of this channel, right? So this is something that I think is again, this is a weekly chart. But I mean, the price is what? This is a 50% rally from here.
Exactly.
That's quite a lot of upside, right? So I think that this is well, again, weekly chart. It's not going to happen in a straight line. It's not going to happen in the next 2 days. But over the next few months, I think this is absolutely a very realistic target for the stock.
All right.
Particularly, even higher if the gold price keeps going.
Yeah. What about, I mean, you spoke about Franco-Nevada right now, and, you know, just that divergence that you saw between the share and the gold price. Do you think that it could have significant upside as well?
Yeah, so I think this is the same situation. I'm just going to use data from a different source. So I think that this is almost the same situation here. So we'll switch this back to a... So look at this, for example. You know, it's rallied very, very strongly, but it's absolutely not one, and look, very, very strongly. This is from 2018, all the way to now, right? So it's kind of trading near its lows that it's been since the lowest since it's been essentially since 2020, right? Or since 2021. Yet the gold price is at the highs. Now again, Franco-Nevada, you know, is an exporter, and it's got, you know, mines all over, and it's kind of might be under a bit of pressure because it can't get its goods. Sounds a bit like South Africa, really.
Yeah, that's exactly. I was like, am I confused?
But again, you know, Suez Canal channel issues or Suez Canal issues. But I think that, you know, this thing is essentially trading in a space where it assumes the gold price is kind of at the lows it's been over the last couple of years, which is absolutely not. So I think that there is, again, I think that this is just literally the herd has hyper-focused on the tech stuff and overlooked, you know, the basic dirty minerals. And it's a very dirty operation to run a gold mine, but, you know, at $2,200 an ounce, it's a very profitable, very profitable exercise, right? So I think that this is a fantastic opportunity.
Well, let's go to another dirty operation. They don't have dirty operations in South Africa anymore. AngloGold Ashanti. Of course, now they're listed in New York.
Well, we're looking at the New York listing simply because it's easier, really. Let's just go AngloGold Ashanti.
And of course, they have a secondary listing on the JSE, but the primary one.
Primary listing is that side now, so this is the, I think, let me actually use the, sorry.
Has the stock re-rated somehow? Because also I know that when you take your primary listing to, you know, somewhere else outside of South Africa, there's a certain re-rating that you'd like.
I mean, yeah, yes and no. You know, the idea was that there was an enormous amount of upside. We did see quite a strong push on the back of that, but since then it's kind of, you know, fizzled out a little bit again. So in any case, here we can now compare apples to apples, right? Because this is a US listing. which trades in dollars, so we can kind of compare dollars with dollars.
Mm-hmm.
Give me just a second.
Oh yeah, of course, the gold price dollars and
yeah.
Okay.
And what's interesting here is that you can actually see that it is slightly over. Have I got this on the index to 100? Yes. So we can see over the last 5 years. Oh, come on. Index to 100. Over the last 5 years, it's been tracking very closely, and every now and then gets a little overvalued. So it seems as though this one has run a little bit harder than what than what the actual gold price has, right? That being said, I'm just going to go back to this. Sorry, I'm making so many changes to this chart all the time. Just going to go back to this, so we can get back to dollar prices. Oh, this is in rands, man. AU.
Quite interesting that this one has actually run harder than the actual gold price.
There you go.
Right?
Okay.
What does that chart look like?
Sorry, this is the dollar one. Ta-da-ta. And there you go. Oh, come on. Okay, so here we have it in comparing apples to apples, right? So we have dollars to dollars. So we can see gold price is up, you know, both started at 100, gold price is up around 20%, and this is up around 30%, right? So that's been a relatively good exercise. However, you know, there's a number of other things that we like about AngloGold. For example, the first one is that it's been in this big range for some time, that it has now broken out of. So we have that range target essentially on the cards, right? As well as we have a little bit of resistance up here. We go into regular mode, around $25. So I think that we probably see this move all the way up to $25. So what is interesting for me here is also, you know, AngloGold, there's a bit of a rumor, I don't really know, that could potentially be a takeout target considering how undervalued it is compared to how it's been historically. If you look at, you know, over the last 12 months, it may have pushed a little bit harder than the gold price itself. However, it is still, in my view, somewhat, I guess, of a bargain, if you will.
Yeah.
If you look at something like this, for example, if you rebase it to here, it kind of changes the picture, right? You don't necessarily want to cheat like that, though. So we can go over the last 6 months. Year to date. So over the last 12 months, there we go. It just seems to me like we have quite a bit more upside here to at least this $25 level. Yeah. So I think that from that sort of overall perspective, I think a lot of these gold miners have been just really ignored.
Yes.
And there's a lot of opportunity here to get long these stuff.
All right. Well, thank you so much for that really, really interesting moves that we are seeing there when you look at the gold price compared to the gold miners. That was a founder of Herenya Capital, Petri Redelinghuys, with this week's Trade of the Week.